I think the biggest thing somebody that's filing this close to deadline has to watch for is making easy mistakes. It's all too easy when you're under pressure at a deadline to pay attention to big stuff and ignore little stuff. One of the easiest ways to get around this problem, well, that's going to be just to use some sort of a commercial product or some sort of a tax prep service. Especially when you're filing a return so close to the deadline, don't let that pressure make you leave money on the table. It's very easy to make assumptions about your tax status. You don't make enough money to benefit from professional tax advice, or you don't really have enough income to justify the time to track your expenses for deductions. Those things aren't often true. It's probably to your benefit to take the time to go over your return and look for opportunities for savings. Among the big things people tend to miss, student loan interest, IRA contributions, even moving expenses. These are all things that can potentially give rise to a 4 AGI deduction. And those are the deductions that do not require us to itemize. For self-employed taxpayers, one thing to be aware of is there are no longer any provisions for bonus depreciation, which is sometimes called additional first-year depreciation, or the increased Section 179 limits. Over the last several years, during this sort of economic malaise we were all suffering through, the government was pretty generous in allowing companies and businesses to deduct a lot of their capital investments up front, meaning if you bought assets that were going to use for more than a year, you were still able to deduct most, if not all, of that investment in the first year, provided you met some requirements. It's a 5% penalty each month, up to a total of 25% of any taxes that you owed on April 15th and hadn't yet paid. If you file that extension, you don't have to pay that penalty. So it's a big deal to make sure you get that form rifled off.